Adobe remains the undisputed king of creative software, but today the stock sits at a critical crossroads as it trades for $334.25. With the share price down 4.52% over the past 3 months, many investors are asking if this tech giant has finally met its match in the form of generative artificial intelligence, or if this is simply a classic buying opportunity. Later in this video, we will advise if you should consider adding this stock to your portfolio and the fundamental reasons why we are taking that stance. Make sure to like and subscribe to Stock or Twist to stay ahead of the curve with our latest analysis of explosive stock moves. And now, let's dive straight into today's video. Adobe operates a dominant software-as-a-service business model that spans three primary pillars, which are the Creative Cloud, the Document Cloud, and the Experience Cloud. These segments provide the essential tools for digital designers and marketing professionals worldwide, including industry standards like Photoshop and Acrobat. On the strengths side, Adobe maintains a massive competitive moat built on high switching costs and a deeply integrated ecosystem that makes it difficult for enterprise clients to transition to rival platforms. The company has successfully shifted from legacy licenses to a high-margin, recurring revenue model that generates predictable cash flows every quarter. Turning to the risks, the landscape is shifting rapidly as generative artificial intelligence tools like Midjourney and Sora threaten to lower the barrier to entry for content creation. While Adobe has launched its own artificial intelligence engine called Firefly to stay competitive, it now faces a rare moment of technological friction. Furthermore, a persistent legal challenge from the Federal Trade Commission regarding subscription cancellation practices continues to weigh on investor sentiment and creates a cloud of regulatory uncertainty for the coming year. Examining the financial health of the business reveals a company that remains a prodigious cash machine despite the recent price volatility. For the fiscal year 2025, Adobe reported record revenue of $23.77 billion, which represents an 11% increase year over year. The company is currently guiding for even more growth in fiscal 2026, with revenue targets set between $25.9 billion and $26.1 billion. On the balance sheet, the debt-to-equity ratio stands at 0.57, showing a moderate level of leverage that is well managed relative to their $10 billion in annual operating cash flow. For investors who believe in the long-term recovery of the stock, a dollar-cost averaging strategy may be effective given that the current valuation is trading near 10-year lows relative to free cash flow. By spreading out purchases over several months, you can mitigate the impact of short-term swings while building a position in a high-quality compounder that is actively repurchasing its own shares to reward long-term holders. In our bull case scenario for the next 1, 3, and 5 years, we expect Adobe to successfully monetize its artificial intelligence initiatives through a generative credit system that increases average revenue per user. In this scenario, the integration of Firefly across the entire Creative Cloud suite will solidify its lead among professionals, and the recent $1.9 billion acquisition of SEMrush will accelerate growth in the digital marketing segment. We could see the stock return to previous highs above $600 as the market re-rates Adobe as an artificial intelligence winner rather than a victim. In our bear case scenario, the rise of open-source and low-cost generative tools like Canva and OpenAI could erode Adobe's pricing power and shrink its total addressable market. If the Federal Trade Commission lawsuit results in significant fines or forces a shift in the subscription model, margins could face downward pressure. Under this scenario, the stock might stagnate in the low $300 range for an extended period as revenue growth slows into the mid-single digits and competitive pressures intensify. Ultimately, you should consider this stock if you have a long-term time horizon and believe that professional-grade tools will always have a place in the market, regardless of how easy basic content creation becomes. Adobe has the cash reserves and the datasets required to fight back against newer startups, and their financial performance remains remarkably consistent. This is a medium-risk play because while the business is fundamentally strong, the technological disruption from artificial intelligence introduces a level of unpredictability we have not seen in over a decade. If you found today's analysis helpful, give the video a like. It helps more traders like you find this information. I want to hear from you. What's your price target for this stock next week? Drop it in the comments below.